Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. Many of you own properties in places you actually love to visit: the Florida coast, the mountains of Tennessee, or a vibrant city getaway. Naturally, the question arises, if I can check on my properties, can I also create a deduction while I'm visiting and inspecting or checking on my property? The answer is a resounding yes, you can. But you have to understand the difference between a commute and a business trip. Today, we're going to discuss the overnight rule, the mileage rates, and how to turn a trip to visit your rental property into a fully deductible expense. The first step is identifying your tax home. This is generally the area where you conduct your primary business activity. So if you manage your rental properties from your personal residence, then your personal residence is your tax home. Same if you manage from an office that you own, that location becomes your tax home. This is a very important part because it's the origination point for any trips you do from that location. So with local travel, if you're driving across town to fix a leaky faucet and you're leaving from your tax home, you cannot deduct the commute. That's referred to as a commute. However, once you reach that rental property, if you need to go on to the hardware store or to the next rental property, those miles are fully deductible. The overnight threshold, if you are looking to unlock big deductions like airfare, hotels, 50% of your meals, you must travel away from your tax home for a period substantially longer than a workday. This usually requires an overnight stay during this period. The mileage rates have increased. The IRS has increased the standard mileage rate in the current tax year to 72.5 cents per mile. This means a 500-mile road trip immediately earns you $362 in deduction. No receipts for gas or oil are needed.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
Under the One Big Beautiful Bill, the mixed purpose travel has become a critical strategy for most landlords. The IRS uses what's called a primary purpose test. If you spend more than 50% of your day on rental activities, inspections, meetings with managers, repairs, the entire cost of your transportation, airfare or mileage, is 100% deductible, even if you spend 49% of the balance of that time at the beach. Timing is absolutely everything. Travel to, evaluate properties in a market where you already own rentals is immediately deductible as an operating expense because you're already in the market. However, if you are looking to scout out a new city, if you're out prospecting for the next area to invest, those travel costs must be capitalized with the property over 27.5 years, assuming it's a residential property, not commercial. Also, the luxury vehicle deduction, if you choose the actual expense method instead of the mileage, you're able to leverage the updated limits for luxury automobiles. You can now deduct up to $20,300 in the first year for depreciation, and that's even if it's just a standard SUV that you're using for property management. Your travel should not be a cost. It should be a strategy. Visit us and become part of the King Life community. I'm Nathan Weaver. Lead with confidence, live with integrity, and build something that lasts.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.